Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Nestor Hugo Solari. Depending on which language we're talking, he uses one name or the other. So since we're recording in English, we'll go with Nestor. So Nestor, thank you for joining me today. How's it going today?
Thanks for having me, Tony. It's going great. Good to be here.
Awesome. And Nestor is co-founder and CEO of Sigo, which is an auto insurance option. Hold on, I lost my train of thought there. I was going to joke about something. Oh, yes. Okay, for the listeners, nowadays the best version of the podcast is on YouTube. So if you are listening to this on the audio-only version and you are just home during the pandemic, I will include the link for the YouTube so that you can check us out with my completely ridiculous hair after 13 months of not cutting it. And Nestor's perfectly manicured beard, which mine is just, I need to shave, basically. So Nestor, what is Sigo?
Great question. Sigo is my favorite topic to talk about, but no, it's inclusive insurance. It's insurance for our community. It was my solution to a problem I saw from outside the insurance industry. So I guess at the highest level, we're an inclusive insurance provider focused on auto insurance for immigrants and the working class in the U.S.
Okay, inclusive auto insurance focused on immigrants and the working class. Okay, so auto insurance, I mean, at this point, people can get auto insurance. Like the working class is perfectly able to get it. Like State Farm is perfectly happy to insure them, kind of thing. And then there's a whole bunch of non-standard carriers. So what did you feel was not quite inclusive of the existing options that made you decide to start your own thing?
That's a great question, because you look at auto insurance and it's arguably the most competitive market in the country, right? But I saw a gap because of a couple of things. One, when you look at disparate impact, as is talked about in the industry, right? Things like credit score, things like employment, rating variables like education, using only your home zip code to price things, that introduces a lot of bias that usually works against the working class or immigrant neighborhoods, right? Because they may not have a credit score, or they may not have an education, a formal education, let's say. And so what we saw was an opportunity to really attack the disparate impact and attack the variables and question how it's been done historically, right? Because these insurers have been built for a very specific type of customer, someone who's suburban, affluent, buying increased limits. And while the working class and immigrants may be able to get insurance, it's often expensive and not a great experience. And so there's challenges to distribution, and there's challenges for the brokers that are selling these policies as well. But you see that particularly this non-standard kind of corner of auto insurance is subject to a whole other layer of distribution fees, the broker fees that they need to pay, that we thought that was the initial thing we were attacking, right? Building a technology platform to get rid of these fees that are extra for this segment of the population. But then we saw a whole bunch of other opportunities to really change how the rating is being done, and maybe not penalize customers that otherwise are great risks, that show that they have lower loss ratios, that are extremely responsible insureds. And so we saw an opportunity to really tailor a product for this customer by not using credit score, by not using employment, by not using education, by building a fully bilingual platform, right? For most Spanish speakers, up until recently, a lot of these websites wouldn't even have a translation option, right? And so that would push people to brick and mortar. When I started Sigo, I guess when I started thinking about Sigo 4 years ago, I was shocked. I'd go to some of these big carriers, your big name carriers that you see on all the commercials, and you couldn't translate their website, and you would hit get quote on the Spanish website and it would kick you over to English. And I thought, no wonder why people like my tia Silvia were forced to go to the neighborhood agent that has higher costs and needs to pass those costs over to the customer. And so getting rid of those variables, building a bilingual platform was really kind of, and instead of forcing customers to go to brick and mortar, doing it all from our phone. Fortunately, smartphone penetration today has really made it possible for everyone to access the internet and access that value. And so that was kind of the gap we saw, particularly for people like my family, which is the whole reason why I started it in the first place.
Okay, so that was a lot of stuff there. Okay, so I am in Atlanta, Georgia nowadays. Atlanta is a majority city, right? It's a very African American city. Before that, I lived in the Midwest for 10 years, a very non-minority area. And I lived in California for a couple of years in between. And in California, when I was sales manager, I was a sales manager with Allied, the independent line brand of Nationwide, back when the lines were separate. And as I ran around California trying to find new agencies, I remember running into things like broker fees, right? And Nationwide is a very Midwestern carrier. They wouldn't touch an agent that charged broker fees. I didn't even know those things existed before, right? And I ran into things like tons of people with no driver's licenses, right? And so that was a big thing for the agents. Is can you insure people that don't have a driver's license because they're undocumented, so they don't qualify. Things like that, I had no idea were a thing. And the other thing in California that was really interesting is California hasn't allowed the use of credit score and the use of gender for several years. So basically, a lot of the rating in California for auto is how many miles a year you drive, right? And that's most of the rating. So so you talked about right, how minority populations suffer when you rate them on credit score, on education, on employment, on zip code, and that totally makes sense, right? The social justice warrior in me, and I'm extremely liberal, right? I'm a Bernie bro. So the social justice warrior in me, and unfortunately that phrase has gained a negative connotation, right? I'm using it in the most positive way possible, right? The bleeding hearts like myself, let's put it that way. We understand, like I've read enough to understand that things like zip code are horribly racist functionally, right? The country is very divided, and the zip code that you live in, unfortunately, is very predictive of your net worth, right? Not necessarily of your skills or your effort or anything else, just basically of your net worth. So part of me is like, I absolutely get it. A good driver should not be penalized because they don't have a master's degree or even a bachelor's. A good driver should not be penalized because they live in the wrong neighborhood, in the quote unquote wrong neighborhood, right?
Exactly.
At the same time, right? So part of me is like, oh my God, yes, you're speaking my language. At the same time, the underwriter in me understands, and the CPCU in me especially understands, that our industry is heavily regulated, and that ultimately the things that we are allowed to use for rating, the reason we are allowed to use them for rating is because there is a correlation, right? So credit scores is a great example, right? We've been using credit score to rate auto for a few decades, I think 20 or 30 years, because it has a correlation with losses. So I've long way to ask the question, or I gave it a lot of context to ask the question. So how should we rate in a more fair way? Like you told me the things that you don't use. What do you use to rate?
You're spot on everything, and I'd say I'm aligned with you, right? I think one way we look at it is just because there's correlation doesn't mean that it's fair or that it should be used. And
Absolutely,
there's something to be said for rating and doing a good job with less data, fewer data points than just collecting as much data as possible, right? And so that's kind of where I'll start, right? Because there's a bunch of reasons why living in a minority zip code could ding you. Or having less education, for example, you'll have less financial literacy as a child, as a young adult. It's easy for an 18-year-old to have $1,000 outstanding credit card that they didn't pay because they didn't understand, and now they're stuck with this for the next decade of their life, right? I would love to insure.
It's more than easy. The system
is built for
designed to get you into debt early, and we're going on big tangents here, but that's the beauty of the medium with podcasts. We have time to do it, but the system very much is designed here in the States to get you into debt rather than to help you get out. Right, most of the advertising, most of the marketing is the great majority of the marketing is spent on getting you in trouble, not in helping you. Right, and if you didn't have the education at home, right, by the time you have enough experience to learn it, it's very late. So anyway, sorry for interrupting.
No, you're absolutely right, and that's really what we're attacking, right? We're not saying that a lot of these insurance companies aren't assessing risk the quote unquote right way if you look at it on an insurance basis. What we're saying is that they're not doing enough. We're not doing enough as an industry, as a society, to help our most vulnerable. And this is where I think it's most apparent, right? It's most apparent that it's very expensive to be poor in the U.S. because only people that are buying your state minimum limits that may be undocumented and that may not have a driving license, they're the ones going and paying $200, $300, $400 up front in a broker fee just to access insurance, right? And that's something that's not apparent to anyone. But you look at the brokers and you say, look, it's higher cost to service a bunch of different customers that are buying small policies. And if they didn't charge these fees, they'd be out of business. And so there's this broken corner that needs to be fixed that we see, that we think can be fixed with modern technology, right? And it's not necessarily that it can't be fixed, it's that it's dated, it's outdated, and it's been ignored because our customers are often ignored. It's an invisible problem to the capital allocators and the decision makers, not just because we're talking about lower income and working class, but we're talking about an industry that has very little diversity at the top, right? And it's very difficult for you to understand the problem of my community if you don't know anyone in my community. And so I think those are important things to call out. I would add what you asked, what should we use to underwrite, right? I think the beauty of everyone having a smartphone and access to the internet is that we have a lot more information available. So things like telematics. We actually launched the first Spanish language safe driving app with our partners called Save in Mexico. We co-launched it here in the US, and it gives customers tips on how to become better drivers while also sharing that data. And so customers will have the option to get a discount on their policies for using things like telematics. I think that has a lot of power going forward. And there's also things that we're looking into like psychometric data, understanding how customers think and react, I think is important. Obviously, something that we'll need to collect a lot of data on before we can actually rate or convince a DOI that we can price on things like that. But there's a lot of other things that we can, and a lot of other levers that we can pull. And just by targeting our community, I think one thing that's important to call out is if you look at loss ratios, right? Claims paid out over premiums paid in, they're lower for this segment of the market that is traditionally considered high risk. And so it's really a dated distribution and infrastructure that leads to your combined ratios being a lot higher. And so that was the first kind of thing we saw, is that, the loss ratios aren't the problem, it's the combined ratios. It's when you add in the operating expenses that there's challenges here. And we immediately attacked that by building a technology platform. But then we realized there's a lot we can improve on the product, not just on the experience, but the rating and the fairness of that rating.
Okay. There's again a lot here. Okay, so a couple of things that I found really interesting. psychometric data. That's what I think I caught that correctly. Psychometric.
Yeah.
So not telematic, not demographic, psychometric, as in measuring the way that you react to things.
Right. And
Okay.
I think there's a...
Is
No,
anybody
please not.
else using this in an insurance context, or did you literally bring this idea into the industry, at least here in the States?
Look, I don't know of anyone else that's really using this data, but we look back and we thought as a team, how can we measure someone's responsibility? I'm not going to say, okay, I don't want to measure how good of a driver you are, but we want to be there if you need your insurance, right? But we want to make sure we're not getting taken advantage of and that there's no fraud. So we started thinking, like, how can we measure a customer's responsibility? And that's when we started thinking about, well, maybe there's some data that we can pull from maybe a survey question that we ask the customer. Maybe there's data that's available on social media. And like I said, this isn't stuff we can rate on yet. But it is things that there is information there that can help us market, and ultimately, if we determine correlations, maybe we can build on that. But one thing we're building into our product that, to give you a sense, is as an honor code. Customers will confirm that they're telling the truth at the very beginning of our process, and it's been proven that if someone is forced to say that they're telling the truth, they're more likely to tell the truth. Even if it's on an insurance application where you should never lie because you'll get your claim denied, but that's another conversation. And there's small tweaks to the product that we think, given our research and what we found, that can make a difference in our losses and in the customer experience.
So you're really interesting stuff here. So I want to go back a little bit because I don't want to forget it, but you mentioned how the problem is serving this market is expensive on the operation, not so much the loss ratio, but rather the rest of the costs that make it the PCR,
management,
right? And I totally agree with that. It reminds me of microinsurance, basically.
Exactly.
Like that stuff can't be done with an agent. It needs to be distributed electronically. It needs to be, and even the claims need to be adjusted in a very cheap, very fast way, right? Basically, you get rid of the white glove treatment. And bring it down to its very basics and automate it as much as possible. And now the cost is a lot better. So that makes a lot of sense to me. So I wanted to make that comparison with microinsurance, which is not often seen in the States. And the other piece, when you talk about the honor code, you made me think of Dan Ariely, the Duke University professor and author.
Common Sense Lab, is that? Yeah.
So I'm a big fan of Ariely, and before Lemonade went and dragged his name into insurance in ways that I don't like, I took his class. I took it on Coursera on dishonesty, and that very thing that you said, where just asking somebody to certify that, or his research found that if you get somebody to sign on the first page of an application or tax return or whatever, they're much less likely to lie than if you ask them to sign in the last page. Like, how random is that? But right, we have found things like that help us nudge people into being honest. And unfortunately, they're really not used in insurance. So I love the fact that you mentioned the honor code, and I was curious if that came from Ariely's research, or where did you run into that particular idea of the honor code?
That's funny you mentioned Dan Ariely. That's exactly kind of the type of research
That's what I figured.
I need to shout out my co-founder Randall, who is an insurance guy, and he's the kind of the architect of our auto insurance product. And he came with a lot of kind of the ideas from the insurance industry. Hey, there's these small tweaks that we could incorporate that would really change insurance behavior. And look, for however smart we think we are, we're pretty predictable on average as humans, and so I think there's a lot of things there that are often overlooked. And it's funny you mentioned micro insurance. Microfinance is what the world I come from, and that's kind of my background. And so there's a lot of those parallels that have been very applicable now looking at solving this problem here in the U.S.
Okay, so I definitely want to dig into your background and how you ended up deciding to come to insurance. Before we do that, I'm assuming that you've been at Sigo from the very beginning. The company's only about 3.5 years old. So I'm assuming that currently you're not all 50 states or all 48 states.
Right.
So where are you actively writing at?
Yeah. So Sigo's young. I've been here since day zero when I incorporated it, and we launched as an agency. And it's funny because originally I was in school in Philadelphia. We launched in Pennsylvania, which doesn't have the exact challenges. Actually, a lot of these broker fees are illegal in Pennsylvania, and that was one of my first learning experiences when I went for several hundred phone calls trying to sell insurance over the phone in Pennsylvania. But that experience was good to get us ready to really learn and understand the market. And so we're currently active in California, Texas, and New Jersey are the 3 states where we're operating. California, Texas, and New Jersey.
And New Jersey. So that makes perfect sense. You need Florida, Arizona, New Mexico, and you've got like 30% of the Latinos Illinois, in the U.S. That's a wild guess, but yeah, those are some of the heaviest states. So that makes perfect
really,
sense.
when you're looking at our market, California, Texas, and Florida make up almost 50%.
That's what. I was pretty close. Okay, that makes perfect sense. Okay, so interestingly, I'm Costa Rican, and Costa Ricans in the U.S. There's only about 5 million Costa Ricans in the world. There's only about 5 million Costa Ricans in Costa Rica, and according to the last numbers I saw, there's only about 140,000 of us in the States. So there's not that many, and we don't build colonies like a lot of other Latinos do. So it's interesting. The one concentration of Costa Ricans in the U.S. is in New Jersey. So when you said New Jersey, I've never actually lived in New Jersey, but it's interesting to me that's the one place where there's a big concentration of Latinos kind of near each other. Of Costa Ricans specifically near each other. So I'm very curious how it came to happen. So I'm looking at your LinkedIn. So you've got an MBA from Wharton, double masters actually, an MBA and an MA in international studies. Before that, bachelor in finance from Penn State. So you're an Ivy League guy.
Well, Penn State's a public state school, but a lot of times it gets confused with Penn. I didn't make it to the Ivy League until my grad school. So Penn State, followed by Wharton. So at Wharton, you're definitely at that, right? That's a top 15, top 20 MBA schools, like no question about that. So you get your MBA from Wharton, and by the way, why did you end up with both an MBA and an MA? Why 2 master's degrees? I'm really curious on that. Yeah, that's funny. It's funny you mentioned the Costa Rican concentration in Jersey, because my family's from Uruguay, and this is one of the small concentrations of Uruguayans as well, and this is kind of where I grew up. But one thing that I was always that I started studying when I lived in Uruguay was Portuguese, and I always had the need, the personal want to finish learning Portuguese, and that was kind of what that Master's in International Studies kind of did for me, because as one of the requirements, you had to become fluent in this other language, which I studied Portuguese, which is where I met my co-founder, who's Brazilian.
So quick pause for our very American listeners who are still listening. Because I know that geography is not well covered in school here. Basically, Uruguay is right next door to Brazil. And
Yeah, right
Brazil
underneath.
doesn't actually speak Spanish like the rest of Latin America, right? Brazil speaks Portuguese. So that's why Portuguese. Anyway, go ahead.
That's exactly right. That's exactly right. It was the language I was missing to really cover Latin America.
All of South America.
Exactly.
Yeah.
And so, and I'm glad I did it. Right. It was, I met a bunch of amazing people, including my co-founder on day one, and it was great. I think that was that the question I was answering? Yeah. The why the dual degree.
So why the dual degree? Okay. So yeah, makes sense. So
I mean, mostly to
before
finish
back-
learning Portuguese, but it was a great learning experience about Latin America and Brazil in general. I'm very happy I did it.
Awesome. So before going back for your MBA, you did Goldman Sachs. You did. It looks like a couple banks, and then you end up in private equity and investment management. So, and you mentioned that you went through microfinance. So yeah, tell me about that path to insurance, because I'll be honest. Most of the time, and in fact, I get people calling all the time and asking. Should I get a master's in insurance? Yeah, absolutely. Should I get a top 20 MBA? I'm like, well, if you can get in, but I'll tell you one thing. Once you graduate, you're not going to stay in insurance because you're much more valuable elsewhere, right? We don't have a ton of people with top 20 MBAs in insurance. So I'm really curious how you ended up pursuing this side.
Well, yeah, I'd have to caveat that one of the reasons I decided to go to school was to work on Sigo, and I probably wouldn't have gone without the decision to found Sigo, because that was one of the core reasons why I wanted to go do that MBA and have those resources. But I moved back from Uruguay in 2007. I had started college in Uruguay, went to Penn State, and got there with the kind of mindset of, I don't know, maybe a little bit of the immigrant parent kind of fear in me of not wanting to be poor. And so looking at what jobs pay a lot, and it was Wall Street and finance jobs. And I said, okay, let me study finance and see if I can get a job on Wall Street. Very fortunate to have had several mentors, had the help of a bunch of great organizations, particularly one called Sponsors for Educational Opportunity, that helped prepare me for that career. But I interned at Goldman Sachs and got a job full time to go work in their investment banking division, focused on Latin America, which was kind of what I was interested in at the time. And what I did there was mostly help countries and the sovereigns and banks raise money, and so there started understanding more about financial institutions. A little over a year there, I kind of realized that I wanted something a bit more fulfilling. I felt myself personally kind of not as interested and engaged as the work and as I was originally, and so that's kind of when I had come across the next fund I worked at, which was called DWM Asset Management, Developing World Markets, and they're one of the pioneers in the impact investing space, in the kind of particularly focused on microfinance, and that's kind of where I got my introduction to what had been kind of the largest part of my career, because I worked at DWM and then I worked at another fund called Creation Investments out in Chicago, and it was all basically mostly making private equity investments into these financial institutions that were serving with the base of the pyramid, the working class, the global, the poor in emerging markets, right? And so we would be making investments, private equity investments into microfinance banks, making microloans, maybe micro insurers, making the insurance I had seen was for crop insurance largely, or life insurance as well. Those were the two big micro insurance products I had seen while I was there. But I had enjoyed kind of the job. It was very intellectually stimulating. I got to travel to over 30 countries in Latin America, Asia, Eastern Europe, Africa, and it was truly a life kind of defining experience for me to work there. But one thing that it did solidify for me is I wanted to get closer to the customer. I felt great helping as an investor and talking to the board and everything. But when I got to visit the customers, that's when I really felt energized, and I felt like this is where the difference is made, right? And so I decided that I'm going to apply to school, and I'm going to start a company, because that's kind of what I felt like I had to do. And I had been applying to school. My parents were still living in Uruguay at this point, but I had what the click moment for me was when I was helping my aunt with her budget, my tia Silvia. I was caught off guard by some of these broker fees. And it wasn't just like broker fee. It was a bill payment fee. She had her auto payments every month getting taken out of her account. But on top of her premium, she had a bill payment fee. And I was like, that's strange for ACH payments. And that the finance guy in me was like, something has to be broken. There should be a free payment. And that was the start of peeling back the onion and realizing, man, private equity has been making a killing rolling up these non-standard auto brokerages across Florida, Texas, California. Over the last 2 decades, there's a bunch of different roll-up strategies. And they love these businesses because they throw off cash like crazy, because the brokers can charge the customer to their last dollar because they don't have any options.
It's the payday lending of insurance.
Exactly. That's exactly what it is.
And it's a mandatory coverage.
You're forced to have it. It's in some senses it's even tougher than for bank accounts, right? Because an estimated about 40% of our target customer base is still operating in cash, still kind of working is still for about
Unbanked?
40% of our customers is unbanked, but and auto insurance is the first financial product they get in the U.S. And so
because it's mandatory. Yeah.
Exactly, because they need it to drive their car to work, because they need it
Yeah,
for
and
their
there's
livelihood.
no public transport unless you live in New York City, DC, Atlanta. And
Our
in
customers outside LA don't have a bus that takes them to the fields, right?
Yeah,
There's
in most
right.
of the states, there's no good public transportation, especially So I'm just now like understanding that like literally as we speak, I'm connecting all the dots of everything I've read in the past, and you're absolutely right. You come to the States, there's no mass transit to in most cities to get you to work, so you're pretty much forced to buy a cheap car, and then you're mandated to have insurance, and then because you have no driving history, because you have no driving history here, right? And you're not on your parents' insurance, it's expensive, and on top of that, a lot of the traditional carriers don't feel comfortable with the risk because they don't know how to underwrite it profitably, and so you end up having to get insurance through channels that are almost exploitative.
You're hitting it on the head, right? People look at me like, oh, you came from Uruguay, you're Latino, what, you got insurance, right? But I had a fancy education, I had a fancy job, I lived in a nice zip code. Like there's no challenge for the big guys, Geico, Progressive, to insure me, right? But they don't have the data on undocumented populations, on your state minimum limit coverages. It's not what they've built their business on.
So you were helping your aunt with her finances, and you saw that, and you were like, okay, something's got to be done. So you started nerding out about insurance and decided to get your MBA in order to start a carrier.
So I was already getting on the way to getting my MBA, but decided that by day one of school, I decided Sigo Seguros, Sigo Insurance is what I'm spending my time here on, and this is what I'm building. And at that point, I had done a lot of research. I had read the research that's out there. Part of the issue is how opaque this corner of the market is. There's different definitions of non-standard. Some carriers don't even classify their customers as non-standard, and there's different numbers. I mean, the wild variations. And I realized that, man, there's this challenge there. But yeah, I started nerding out about insurance. I got to school. I got my PNC insurer's license. I signed up for my PNC agent's license. I signed up for one of those carrier networks, kind of one of those intro for new agents, and started trying to sell insurance over the phone, and realized that there's more to it here, which I learned over time. I mean, at the end of the first year, I was fortunate that my good friend at that time, Julio, we were talking about his job offers, and and I invited him to join me on the journey. And unfortunately, he said yes, and we've been working on it together since our first summer after business school. Again, trying to sell insurance in Pennsylvania over the phone, trying to figure out what is the issue here. Because we were new to this. It took me several years to get even up to speed to the point where I'd consider myself an expert in non-standard auto. But that first 12 to 24 months was a lot of kind of trial and error, talking to people, building that network, building that understanding. And then the summer after we graduated, we went full time, finally started selling policies because we figured out these are the carriers that we need to offer our customers, and this is where our customers are. And we started selling policies, and I think that was the steepest point of my insurance learning curve kind of experience. When I started actually getting on the phone with customers and actually binding these policies and crossing that revenue gap where they're actually paying us for stuff, that's when I realized all the real challenges customers have, from payments to understanding their policy to getting the right policy for them. That's when all of that was really uncovered. And so once we were able to start actually selling insurance over the phone, that's when we got a lot smarter. And that's when we realized there's much more to this issue. There's a lot more for us to fix here, rather than just a tech-enabled brokerage that can sell insurance for people.
So after a couple of years of actually writing policies, how many autos do you insure? How many people do you insure?
Well, right now I can tell you in our agency tests that we've run, we've done a couple $100,000 in premiums. And that's been in our agency through California and Texas, and we've sold several hundred policies there. What we're launching now is our own product, like you alluded to in Texas. We built our own program, and this is where we're going to be doing the underwriting ourselves. We're actually preparing to sell our first policy this month, which is exciting. It'll be the first Sigo Insurance policy out there, and we'll do an official launch this summer. But we're going to get going in Texas with our own insurance, and we should have our first policy on the book this month.
That's fantastic. Congrats. Absolutely.
Thanks.
Congrats. That is truly fantastic. So and everything's in line. You've got paper, you've got reinsurance.
Everything's signed up.
You're licensed as an MGA?
As an MGA, yep. So we have our MGA license in Texas. We have the paper lined up. We have the reinsurance capacity locked down. We have our partners on the tech and the claims side. It's all buttoned up to the point where we're getting ready. Like I said, this month. This isn't something that happens overnight. We kicked off this process almost a year and a half ago. So it's crazy to see it all come together.
How many employees?
Right now we're 8 of us full time. Half our team is in Latin America. And then our founding team is here in the U.S.
So the Latin American team, is that going to be customer service, or are they?
So those are our engineers. Yeah, those are our engineers. So most of our engineering capacities, and then our co-founder Ivan is leading that team from California. But those are our engineers. We'll also build out probably some customer service, some call center capacity at some point. But for now, we're keeping that onshore and in-house because we want licensed agents interacting with customers and make sure we're controlling that customer experience as much as possible.
Fantastic. This is very exciting. I never thought I'd be excited for non-standard auto.
I never thought I'd be excited about insurance either.
It's just awesome to see people identifying a problem. Like you have no idea how many guests I get, how many insurtechs I run into that are, you know, a tech toy or a tech hammer looking for a nail, for an insurance nail. On the other hand, I also run into, not on the podcast, but in other circles, helping them with staffing or whatever. They're basically private equity or basically just institutional money looking for a return within insurance, and they don't care about the good that they can do with their products. So it is, and there's other types where I run it into lemonade style where they say they care, but I'm not I'm not convinced that it is anything more than a moneymaker.
Lip service,
so it
yeah.
is really awesome to run into people in our industry who are trying new things specifically to help a specific group of people who need help. So I love the mission driven. This is what insurance is all about, right? This is going back. In fact, when you were talking about at the very beginning of the conversation, it reminded me a lot of the Nationwide story of how they got. Because I grew up at Nationwide, so I read the book about how they got created and stuff. And in that case, it was Ohio farmers, but basically very similar. Like, hey, we are getting overcharged by the existing insurers who don't understand us and our risk profile. We can do this better, right? And so it's the same old story. It's just for a new population and with new tools, with tech-enabled tools that didn't exist before. Very interesting. I looking forward to see you guys grow. The customer segment you're going after is one of the few growing customer segments in the US. So you have a lot of potential. I'm really excited to see you guys grow. Thank you so much for coming today. This has been very interesting, a lot of fun, and I think this will be inspiring to others who want to make a difference. And I think it's a great showing of how insurance can and does make a difference, which we get very little credit for. Thank you so much for joining me today, Nestor.
I appreciate it, Tony, and I'll leave you with this. I think I'm new to the insurance game, but I think one thing that I found kind of coming into it is it's very big on community and relationships as a business. But when you look at it at its core, it's the community being there for each other, right? All of us putting money together and pooling it together to help someone when they need help. And I think that's when a lot of it kind of has gone off the rails a bit. And I think that we're trying to bring it a little bit back to that story that you said, hey, we can do this a little bit better, and we can do better by our customers and make a sustainable, profitable business that can scale at the same time. So I appreciate you having me here, Tony. This has been great. Looking forward to being in touch, and thanks for the time.
Awesome. Thank you.